The global economy is experiencing a period of profound change. Asia is very much the center of this global change. Asia's role in the global economy has not only been in terms of its growing size, but also in terms of its influence in the global economic and financial developments. The issue before us is whether Asia will continue its transformative momentum over the medium and longer term to become an increasingly important source of global growth and stability. Ladies and gentlemen, it is my very great honor and pleasure to be here in Jakarta to speak at this Wharton Global Alumni Forum. Actually, it was a decade ago I was invited to speak on the same subject on the state and future of Asia at the Wharton School in Philadelphia. Then, having just emerged from the Asian financial crisis, the region was again being challenged by a series of economic and financial shocks. In particular, the bursting of the dot-com bubble in the United States in the year 2000. Observers then questioned the sustainability of the region's medium and longer-term growth prospects. Now, 5 years into the global financial crisis, Asia is faced with an even more challenging and uncertain global environment as significant spillovers originating from Europe and the United States are being felt by the region. Again, questions on the sustainability of the region's economic growth prospects are being raised. My remarks today will focus on the new challenges that are confronting Asia and whether its resilience, built in this decade, will now enable Asia to rise to these greater and more complex challenges. Given the degree of openness of most of the Asian economies, Asia is highly integrated with the global economy. While Asia benefited from this openness, it also resulted in the region being more vulnerable to global financial and economic developments. Many previous episodes of economic recession and crises were triggered by external shocks, which at times exacerbated and amplified domestic vulnerabilities. This includes the commodity price shocks in the 1970s and 80s, the large swings of destabilizing capital flows in the 1990s, the bursting of the tech bubble and the SARS epidemic in the early 2000s, and finally, of course, the global recession, which saw an unprecedented decline in global trade. The ongoing global financial and economic crisis is resulting in turbulence in the international financial markets. In part, this is emanating from the global policy spillovers arising from the unprecedented monetary easing that has resulted in surges of inflows in search of higher returns in a low interest rate environment. Then, followed by reversals arising from deleveraging efforts to reduce public and private indebtedness. This is in the external environment. These volatile capital flows of surges and reversals in the international financial markets have increased the volatility of our exchange rates and asset markets. The low international interest rate environment has also been a factor that has increased the prospect for the financialization of commodity markets, which of course has significant implications for some of us who are commodity producers. Finally, there is the impact of the potential unintended consequences of the global financial regulatory reforms. The effort to implement the new global regulatory reforms is already underway in Asia, with many jurisdictions making significant progress. The reforms have aimed to significantly enhance the financial institution's soundness and safeguard financial stability. Concerns have, however, been raised on the unintended consequences that may arise in emerging economies in particular, including its potential ramifications on the real economy. This underscores the importance to implement these reforms cautiously, including the need to conduct impact and behavioral studies and to consider how the national implementation of these global standards should take into consideration the reflective domestic experiences and circumstances. Ladies and gentlemen, Asia's rapid growth trajectory, as we've seen for Indonesia in particular, over several decades has been underpinned by a number of fundamental characteristics. The same characteristics are still present and will continue to support our ongoing transformation that is currently taking place. More recently, distinct strategies have been implemented to strengthen further our macroeconomic fundamentals, the financial system soundness in the region. And just now, the Vice President of Indonesia highlighted the many strategies and measures that are being put in place in Indonesia. These stronger foundations of steady growth, low unemployment, relatively low inflation, and strong and more developed financial systems have strengthened Asia's resilience and its ability to manage external vulnerabilities. They have placed Asia today in a stronger position to secure and sustain its future growth and stability compared to a decade ago. Three prominent characteristics are also common in most countries in the region that have contributed to Asia's economic success. First and foremost, and important, is our economic flexibility in Asia. The ability to adjust to changing conditions without being weighed down by structural impediments and policy rigidities. The significant investment in productivity enhancements and technology is complemented by a high degree of capital and labor mobility, giving us that agility. Financial reforms for deregulation and greater market orientation and liberalization have also facilitated the region to continually shift resources to new areas of comparative advantage. And this is ongoing. A country like Malaysia, where I come from, we have shifted out continually as industries move out of our system to go to countries like Indonesia, Vietnam, and China. And as we shift into new growth areas and new areas of comparative advantage. And it is because of our agility and flexibility of our economy that allows us to do this. This has not only enhanced Asia's competitiveness, but has yielded a more diversified economic structure in most of our economies. More recently, the policy strategy has been to strengthen the domestic demand as a driver of growth. This serves to anchor Asia's growth prospects. As domestic demand strengthens, Asia is transitioning from being global producers to becoming global consumers. This trend will also contribute towards more global growth that is more balanced. Asia is one of the most diverse regions in the world. in terms of market size, stage of development, resource endowment, economic structure, financial sector development, and market systems. Asia has therefore leveraged on its complementarities arising from this diversity. This is reflected in the increased cross-border production networks in Asia, where substantial gains have been experienced from the region being involved in the entire supply chain for a wide range of products and services. Increased intra-regional trade and investment over this recent decade has also resulted in a more diversified export structure. Going forward, this diversity will continue to present significant opportunities in the form of large and growing markets across a wide spectrum of goods and services. Accounting for 60% of the world's population, and of course a large part of it in China, India, and Indonesia, Asia is by far the most populous region in the world. This demographic advantage is a key economic asset for the region. In this recent decade, a young middle-class population has emerged, and it is growing both in number and affluence. Asia's current middle class of 500 million people is projected to increase more than sixfold to exceed 3 million people, 3 billion people by 2030. This tremendous increase in scale will significantly raise Asia's potential to be important consumers in the global economy. In parallel, urbanization and infrastructure development will reinforce this trend. This increase in consumption and the greater need for investment will anchor the growing importance of domestic demand in Asia. Ladies and gentlemen, these fundamentals have been reinforced by the implementation of distinct strategies that have been undertaken in this recent decade following the Asian financial crisis to strengthen the region's ability to manage shocks. The effectiveness of these reforms was put to a test in this recent global financial crisis. While affected by the crisis, and everyone talks of decoupling, no, we are partially decoupled, and precisely for this reason, that the effects on, we are affected, our domestic economies and financial systems have been affected, but these are relatively well contained. Importantly, financial intermediation has not been at any time disrupted, and financial systems have continued to supply credit to support the real economy. Following the Asian financial crisis, wide-ranging financial reforms were undertaken to strengthen the financial systems of the region. The building of sufficient capital and liquidity buffers during good times provided this ability to support continued credit intermediation. Improved regulatory and supervisory approach underpinned by enhanced governance and risk management practices. In fact, we put all in place the kind of measures that are being discussed in the international regulatory reform, and all this has enhanced financial stability in our region. This is reinforced further by enhanced surveillance arrangements, and a wider range of policy tools have been put in place by policy makers so that we are in a better state of readiness to deal with the problems in the financial system preemptively. If we don't, as a policy maker, policies need to be anticipatory. After the fact, the cost on the system in terms of the adjustments that need to be made and the costs to the fiscal budget and the costs to the public at large will be far larger. Macroprudential policies have also been extensively relied upon to mitigate the risks from excesses and imbalances in the financial system. Continued efforts were also made to further advance the financial sector development in the region, and in particular, the development of our domestic bond markets has served to reinforce the foundations of financial stability in Asia. Financial activities have also remained generally anchored to the productive real economic activity. Therefore, in our region, we have not seen the disconnect happening between the financial sector or financial system and the real economy. In addition, the region, of course, most of the region has strong external position, high international reserves, and more flexible exchange rates that have enabled Asia to absorb and adjust to the changing external conditions. Finally, I want to say something about the greater cohesiveness of Asia. It's also a core strength and a source of stability for the region. We have become more cohesive and integrated. Steps have been intensified during this recent decade for greater financial integration. I've often been asked, we've always had economic integration of trade and investment across the region, and the fact that we lacked financial integration was not an inhibiting factor to economic integration. What then is the motivation for pushing ahead and driving greater regional financial integration? The motivation for financial integration is not only to unlock our growth potential of the region, but to achieve more effective and efficient intermediation of funds in the region, particularly by channeling the large surplus funds that are present in our region to productive investments within the region. This would also support regional economic integration. While Asia's trade with economies outside the region has doubled since the year 2000, intra-Asia trade has tripled. Now, more than 55% of Asia's total trade is within the region. Intra-regional investment activity has also increased significantly during this decade. It is important to recognize that the approach to a more integrated Asia will be very different from that adopted by Europe. In the early 2000s, a study was undertaken by ASEAN 10 economies, which concluded that the region did not have the preconditions for a single currency. A different route, therefore, would be taken to achieve that greater financial integration. For the ASEAN region, it would involve a sequenced liberalization of the financial sector and capital account, the development of regional financial markets and financial infrastructure, including regional payments and settlement systems. This arrangement also allows for a gradual pace to integration to ensure domestic readiness and the flexibility to take into account the prevailing conditions and stage of development of a participating financial system. Therefore, there isn't a one-track model, and it allows for great flexibility. Regional collaborative efforts have also been significantly enhanced in the area of crisis management. We drew from the many lessons that we learned during the Asian financial crisis, and we draw the lessons from the recent European financial crisis. The region is now well ahead in the areas of regional surveillance and supervisory arrangement, and in crisis prevention, management, and resolution. Regional support mechanisms have also been established. There are also regional institutional arrangements in place for active sharing of information on the emerging risks to regional stability and on building domestic capabilities to coordinate regional responses in the event of imminent risks to the region. And all these efforts continue to be strengthened as we advance into the future. Ladies and gentlemen, I do want to say something about Islamic finance. The rapid integration of Islamic finance into the international financial system is a growing feature now in the financial landscape in Asia. Developments in several emerging economies in Asia and our links with, especially in the Middle East and other parts of the world, in Europe in particular, have been seen the rapid expansion of Islamic finance. The global Islamic financial assets are now estimated to be more than $1 trillion US. While more than 60% of the world's Muslim population are in Asia, I would like to emphasize that the interest in Islamic finance transcends beyond this community. In Malaysia alone, where it accounts for 20% of our domestic banking system, more than 50% of the clients participating in this are non-Muslims. The inherent principle of Islamic finance requires that financial transactions must be accompanied by an underlying economic transaction. And this ensures a close link between the expansion of financial assets and the real economy. It also increases the potential for fostering growth. This has positioned Islamic finance to be well anchored to serve the real economy and enhances its potential as a sustainable and stable form of financial intermediation. With the intensification and the internationalization of Islamic finance, it has an increasing role also in bridging economies through the mobilization and channeling of funds to productive investment activities across borders. There are now more than 600 financial institutions operating in more than 70 countries. And the sukuk market, that is the bond market, is becoming an important platform for international fundraising and investment activities that are generating increased cross-border flows. From an outstanding of 33 billion US in 2006, the sukuk market is now 180 billion US dollars by the end of 2011. There has also been a growing trend for multi-currency sukuk issuance in Asia, attracting global investors to participate in this market. Out of the sukuk market in Malaysia, we were very encouraged by the recent issuances in Sing dollar and more recently in the renminbi. And there are more in the pipeline. In reinforcing the internationalization of Islamic finance, global initiatives have been taken to strengthen its institutional and international infrastructure with emphasis on ensuring financial stability. International prudential standards and best practices are issued by the Islamic Financial Services Board, similar to the BIS, which was established in 2002. And the industry is also guided by international accounting standards, which have been issued by the Accounting and Auditing Organization for Islamic Financial Institutions, established in 1990. Ladies and gentlemen, let me conclude my remarks to say, to fully realize the Asian potential, continuing the transformative momentum of the region will not be complete without ensuring that the benefits of development are widely shared. Experience has shown, even in the advanced economies, that when inequality is high, and a significant portion of the population is excluded from the opportunity to participate meaningfully in income and wealth generation, instability follows. To ensure that rapid economic growth and transformation does not further widen the social divide and disenfranchises those who remain excluded from its benefits, access to high-quality For example, healthcare, social security, and financial inclusion, therefore, has become an important focus in our region. The contour of the global economy is fundamentally changing amidst mounting challenges and continued uncertainties. And in this environment, Asia has become a source of stability. While the region is affected by the ongoing economic and financial crises, the Asian region continues to remain on a growth trajectory, although at a more modest level. Greater regional cohesiveness and cooperation, however, has enhanced Asia's potential to address these new challenges that are confronting the region. And the success of the region is not only the interest of Asian economies, but of the world. Thank you for your attention.